21st for the 29th of September, the last trading day for September. Okay, so what's in store for us in the events? In today's fundamentals, I'd like to talk about the US oil price and the Treasury yield rising. Okay, this I think is a subject that is not discussed much because everybody's just looking into other areas. When it comes to just those short-term tradings, they're looking at other areas. But I think in the longer term, we should understand the relationship, how these two particular asset classes are affecting, all the overall movements. Okay. Now, first of all, we are seeing both US oil price and Treasury yield rising at the same time. Now, what we're seeing right now is the US oil prices has risen to a high of 95.358. Okay. It has since dropped a bit. Right now, it's about 92 US dollars, but it's still on the high side. It's already hit our level of 95 that we talked about in the report. Now, looking into the treasuries, we have the 2-year US government bond yields at 5.212%. And finally, the 10-year US government bond yield at 4.688%. Right? So bond yields are right now, these levels are at 16-year highs, whereas the oil prices at 13 months high. Okay. So with these developments, we would mean Core PCE Prices Index month to month would garner even more attention than usual today. Why do I say that? So because if we see Core PCE Prices Index coming higher than previous months, the Fed would consider raising rates further. Okay. For now, Fed Chair Powell has indicated there will probably be one more rate hike in 2023. The market is not buying this narrative, but if this continues, this oil price continue to rise, and we see the same thing happening to the 2-year bond yield plus the 10-year bond yield, that could actually happen. Okay, because especially people rushing towards over here, yeah, that could change the narrative nevertheless, because there is this possibility of further rate hikes. And usually when the market thinks there would be one, slowly you will see this rising further. But oil prices, that's the one. This is the point where we need to look into detail, because oil, whether you like it or not, affects every single thing in our life today. Okay. And if this continues to push higher, definitely the inflation won't come down that fast, right? So anyway, looking at the probabilities, because the market is not buying this narrative, they are pricing in a 78% probability the Fed will leave interest rates unchanged at 5.5% after its next meeting on November the 1st. Okay, so anyway, when the PCE price index comes out tonight, we would have a clearer idea, and then we will see, yeah, how this plays out. Now, on the other hand, the US government is also facing another issue. Apart from the dealing with the rising oil prices, they have to also deal with the possible shutdown. Okay, so the last date would be tomorrow for them to settle. If not, come Monday, basically, if they don't settle it, there's no pay. No pay is going to come out for the federal workers, right? So the development so far we have seen is the House Speaker Kevin McCarthy criticized a short-term government funding bill, as the bill would not bolster border security. He said border security, now we don't see there's any good things happening over there, so we can't. Okay, he really said that's not a good thing. Now with this criticism, it only shows one thing, that there will be a delay, possible delay, because when you criticize, that means you don't agree. There's more negotiations going to take place. So that's going to take more time, so a shutdown can really happen. Okay, so, and to top that, he's also saying that he's facing challenges within the House members from his own party as negotiations continue. This I have highlighted already in my previous report, right? So now, so far, all the investors, they're hoping for a stopgap measure to be put in place in the event of a delay. They were still hoping for that. All that is confirmed. It's confirmed. It's not going to happen so far. Okay, all your hopes, all those hopes are dashed. Because McCarthy said very, very clearly, I've got members who will not vote to have a stopgap measure to continue fund government. I got members who say they'll never vote for it. I think this is very clear already. This is very, very clear already. Forget about this one, whoever is hoping for a stopgap. Because until yesterday, there were articles saying that probably there's a stopgap and all these kind of things. Yeah, McCarthy has put that to bed. So at the end of the day, you can only be hopeful, and we know for sure this impasse is going to end. The question is when. I don't think it's going to go beyond the 34-day mark record created by Donald Trump. But definitely there's going to be a delay right now. Okay. And like what McCarthy said, at the end of the day, we will get this done. It's as simple as that. Okay. So with that, that's the report for the fundamentals today.